is going to be a full uncut breakdown of a trade I took on Thursday, the 11th of June. It was a New York continuation. I'm going to run through the higher time frame, the intraday time frames, and the premium discount of the overall range, as well as entry models, bit of discretion, etc. Okay, so as you can see up here, we have got key points. Okay, so key point number one will be the higher time frame direction. What way is the higher time frame trading? In this scenario, it's bearish. Our current trading range is rebalanced, so you can see from high to low has been rebalanced on Tuesday. Once price taps the EQ of that range, fair value has been offered. And number three, we are now trading the intraday and the higher time frame in alignment. Okay, so our daily and then our 1 and our 4 are all trading in one direction, which means we should be only looking for that given direction, which in this case is sells. Okay, so on Thursday, what am I looking at? So from this low that rebalanced, we have got a shift and we've rebalanced out that range and we broke structure again. Okay, so from this high to this low is our trading range, simply looking for a continuation of that. In London, I didn't trade this day because I wasn't confident in price continuing. I didn't know if high today was going to be set, if we trade higher to trade lower. So I simply was not confident. What did I do? I sat out and waited for London to give me confirmation of what price wanted to do. If London broke structure to the downside, I'd simply just look for the continuation of London's price action. And that's exactly what happened on this day. Okay, so I fast forward price a couple of candles. Okay, and now as you can see, this is the low that caused the rebalance, and on the break of structure, a wick is valid. Okay, so marking out the new trading range that's been presented from price will be from Asian high, the highest high that caused the low that broke structure. Okay, for me, what I look for in continuations is a rebalance, a point of interest, and a sweep of liquidity, obviously fitted with some sort of entry model. Okay, so one, we have got a new trading range. Looking for number two, which would be a rebalance. Three, a sweep of liquidity, and four, ideally a point of interest. Okay, so we have an internal high here, like so, mark that liquidity, and then we have an overlapping 1 hour fair value gap as well. Okay, which is lining up very nicely just below that fair value gap. Okay, as well as resting just in the EQ of that break structure leg. Again, we try to price higher the next candle, and you can see on 12 o'clock open, which is New York kill zone for me, price trades higher and rebalances straight away. Rebalances, takes liquidity, and into a point of interest are three key points we need. Okay, so now we have intraday time frames, we have our confirmation from London. Now we're simply looking for, as I said, a rebalance criteria as well fitted with some sort of entry model. So scaling down to our entry model time frames being your 5 and your 3. Okay, so the 5 doesn't look great, so it was on the 3 minute for this. I took a 3 minute entry, so you can see price starts slowing down around this area. Okay, so this is an area in price that makes sense for price to continue to overall break structure below this low, and then to an overall higher time frame drawing liquidity, which will be all the way down here. Okay, so with that being said, looking for an entry model, we have a New York high, we have a rebalance, point of interest, liquidity, everything we could ask for. Now is the case of looking for some sort of entry model. Now, as I said, on the 3 was my entry, so simply looking for a bit of confirmation, a bit of conviction from price. Fast forward price a few candles. Okay, keep going, and we eventually get that bit of distribution out of that area. Okay, so you can see here, bit of displacement, etc. out of that area. Now that gives me enough tell that I could take this position. Okay, so my entry in this was a 3 minute change in state. So the last high or low that caused the overall highest high is your change in state. It will be that low there. Okay, and simply with a change in state, once you get a candle close below the higher low in this case, that is a valid change in state. You set a limit or market execute on the body of that candle. Okay, so for me, I'd set a limit on that low. And now a bit of discretion kicking in here. So the stop for this is 5.8 with no breathing room. I am very confident on direction and draws liquidity, etc. So I don't want to be caught up in inducement. So I get this a good bit of breathing room. Okay, so I give it 10 pips. Okay, so I give it 10 pips. And the reason I give it 10 pips is because if I want to target the overall breaker structure that makes sense for the weekly profile down here, it's still 3.6 return. Okay, and I only need a 3 or to pass this account. So With 10 pips, a good bit of breathing room, it's still more than enough to pass the account all the way down here. So I don't even need that full return. So I only needed 3R. So I only need price to come down this far. So I'm taking into account the adjustment, and I still don't need a mad return on the trade. Okay, so with that being said, entry model was the trimming chain stay. Next candle after the close doesn't tap it, and the next one then does. Okay, you can see there, nice and easy. Price comes back up, wicks reject, and then we trade lower. Okay, and we get a nice bit of volume out of that area. Okay, when I'm seeing this, I'm saying, okay, that's wraps, trade's done. Okay, and little did I know, price wanted to trade higher again. Okay, so key tell here. I took into account the adjustment, and that's exactly what happened. Okay, so people know that tried this as well got stopped out. They didn't leave enough on it. This is just my discretion kicking in. I didn't want to be a part of the inducement because I'm very confident on the direction. Okay, so I left a bit on the stop loss, as you can see. And then after that, if I let price play forward, you can see after we get the inducement, we trade away. And then later on the day, we then get the TP. And then this was nil to just trump down by those. But as you can see, the idea was correct, and it was a really good idea to leave a bit on the stop loss to take into account inducement, and that passed me a 100k phase one, as well as bagging me $6,000 in one trade. That's it. A very simple entry model, but the overall plan and context behind this. So I was building this trade for days and days and days, letting price give me information. What can I do with the information? There's trading what I know, trading what the markets are telling me, and then that resulted in this trade. If you have any questions on anything you see in this video, please do ask away in the comments. I'll be happy to help. And that's it. I will see you in the next video. Thank you.